Josh Lawler likes to give me a heart attack and show up late. So Josh, get your butt over here, man. How are you, man? You all right?
I'm good, thank you. Yes, my butt is over here.
Thank you, man. I was going to wing it. Let's bring our guests over here. George and Jen and Nick and Brad. I mean, all these guys are so tired of hearing from me. It would have been just a massacre. So, Josh, I'm going to let you go for it. I'll be back for potentially some Q&A.
Right on. Thank you, Patrick. And so good to be here with all of our panelists. Everybody's labeled, of course, but we have Nicholas Vita, who is the CEO of Columbia Care, Jen Drake, who's the CEO of Ire Wellness, Brad Rogers, CEO of Red, White, and Bloom, and George Allen, who's the chairman of the board of Lowell Farms. And for anybody who is not aware, these are four very active multi-state operators in the cannabis business who take some approaches that are similar in some ways and different in other ways. And we are going to talk about what is next for MSOs in 2021 as we go forward and beyond, I suppose. The first thing I wanted to get to, you guys are all doing transactions and deals of various types. What's the thinking in terms of growth of the company, organic versus, acquisition of other companies, or in some cases, licensing rights? And actually, I want to start out with Brad, and we can talk a little bit about what you guys have done with High Times, and how are you guys thinking about growth?
Sure. Yeah. I mean, I think it's multi-tiered. I don't think it's one thing that's going to be your strategy. At least it isn't for us. We're acquisitional. We're going to buy accretive companies that do good things in certain areas of our strategy, which is effectively a brand strategy. RWB is in fact called RWB Brands. It's Red, White, and Bloom Brands, and so it's effectively a house of brands with specialized pieces that we're going to build upon with acquisition, and then that gets accretive, and then you get your synergies, and then you can build upon your acquisitions with the brand, and that underpins everything else that leads into a nice big company that has some solid underpinnings of some smart business that we're doing right now. So you'll see a lot of these things happening in the next little while with us, and you've seen a lot that have already transpired. So we're excited to move on and really execute on our strategy.
Thanks, Brad. And Nicholas, Columbia Care is a known acquirer of various entities. Obviously, you guys are very large. I think you've got over 110 licenses in various places, and you're in Europe as well. How do you guys approach the growth? Is it always going to be acquisition, or is there other avenues that you guys take?
Well, it's a really fascinating question, because I think if you talk to all four of us, there will be similarities and differences in the way we approach frankly, the hyperbolic growth that the industry is seeing. On the one hand, you have the continued evolution of state level programs where you have, no programs becoming a program, like West Virginia, Utah, and Missouri. Then you have the scenario where you have a medical program that's converting to an adult use program, like Virginia, New York, and New Jersey, or Arizona. All of which have staggering growth rates, significant opportunities to improve margins, and really, I think, demonstrate the power of brand, but also of scale and the need for both. And then you've got the acquisition strategy, which is really a function of consolidation and really getting scales of economy. I think today, 99% of the value being created for shareholders in the world is really in the U.S. We may have operations overseas, but it's for all intents and purposes, it's a U.S. industry today. And that's where we're spending most of our time. But you're going to see consolidation in hyper-fragmented markets like Colorado and California. You're going to see consolidation in limited license markets like Pennsylvania and New Jersey. I think the theme is that everybody's looking at a way to build enough infrastructure to really position themselves for federal legalization. It looks as if now we're going to see some type of movement after Labor Day from the Senate. But in the meantime, we've also seen movement in the House already, right, in the introduction of the SAFE Act. So you've got this confluence of events that I think really result in what I would argue is one of the most attractive and asymmetric industrial opportunities I've seen in my lifetime. Because worst case scenario is we are where we are today, which is Air is doing great, right? Lowell is doing great. Red, White, and Bloom is doing great. But we fast forward a year from now, like the entire landscape may be materially different. And if it is different, it's most likely going to be materially different to the upside. So we're very enthusiastic about everything that's going on right now. We're very supportive of the strategic and tactical decisions people were making. And the other thing that I think I would just mention is that capital may not be reflected in the volumes of some of the stocks, but the fact of the matter is that capital is out there. And we constantly receive incoming calls from both debt and equity investors looking for ways to position themselves because, it's a very simple theory, right? This is the biggest agricultural product on the planet, right? And so to think that there isn't an economic opportunity in today and down the road is, I think is a mistake.
I'm smiling very wide because I think you just gave like a really solid discussion of the entire panel that I was going to get every question. Yeah, no, absolutely.
Who gave them the answers?
Yeah, Jen and George, I talk too much. So
who gave them all the answers?
Yeah. There's definitely some cheating going on.
The
cannabis space growing, of course not. George, you take a different approach. Obviously, Lowell Farms has a very distinctive California-focused brand, and you guys recently did your deal with Ascend Wellness to get into Massachusetts and Illinois. But in general speaking, you're concentrated more on California. Do you guys think about growth through acquisition at all, or is it all organic? Is it all going to be product licensing oriented?
Yeah, 100%. We definitely think about acquisitions. I mean, just given my background and my experience, it's hard for me not to ever stop thinking about acquisitions. It's a bit of a bit of an issue. But the question is which ones to do and which ones not to do. And we spend a lot of time looking for the right contiguous assets. But the mission for us isn't really even coming close to done until I realize all the potential that's inside the Lowell brand. And so all the things that we're doing, all the acquisitions that we make are really done with the full intentionality of bringing the best product to market at the best price point in the form factor that consumers want, with a marketing message that really makes them feel great about their choice in cannabis. Until I do that, it's very hard for me to imagine taking our focus and elsewhere. I do watch what's happening elsewhere in the country with a lot of interest and attention, and I very much look forward to the day where we can offer Lowell to that market. But I want to win the largest single country in the world for cannabis right now, and that's California.
Right on. Well, I'm located in California, of course, and obviously a partner at Zuber Lawler. We're in 7 states, but California is where we were kind of born. So I can appreciate that and also appreciate the challenge that California presents, and we'll get to that in a second. I want to hear from Jen with respect to IR Wellness's approach to acquisitions, and you guys, of course, acquired Liberty in Florida with 42 locations, which is just a really large-sized deal. What do you see kind of in the future of IR? Is it going to take a little while to maybe digest that and get it going, or are you guys kind of full steam ahead and looking as you might expand into other places?
No, listen, for us, I totally agree with what Nick said. This is just this is the very beginning of what is going to be a long stretch of exciting opportunities in the sector for us. Florida is a great opportunity. It's a really big focus for us at the moment, but it's just one of 7 states that's going to contribute over 100 million of revenue to our 2022 results. So our approach to acquisition is to really focus on states and products and brands that really matter and that can add to our bottom line, because we really think that it's incredibly important to keep the talent that we have focused on the most important parts of the business that can really drive kind of real performance for us and for our shareholders. So we don't want to spread ourselves too thin. We really like being in places like Florida where you can get incredible critical mass. But we also have incredible critical mass in places like Massachusetts and Nevada and Pennsylvania, which we want to grow and consolidate. Arizona, where we want to grow and consolidate, and there are some other really, really impactful states that we'd love to move into. And as we build out this robust footprint, we're also very focused now on expanding to kind of other areas of growth as well. So you shouldn't be surprised to see us do some interesting new things in the not too distant future. Plus, I would be I would be remiss if I didn't, highlight the excellent organic growth that we just get from our, day in, day out, blocking and tackling portfolio. In this business, people think that 5% quarter on quarter organic growth is like ho hum. In every other business in the world, that's an incredible feat. So, we have an amazing business in Nevada, for example, that keeps on giving, which is an amazing thing for us. So, I have to shout out to the team on the ground that does a great job of, organically growing in our markets also.
Right on. So, obviously I'm a securities lawyer by trade, and I function a lot in the cannabis space, but you did just kind of tease something that, you're thinking there are new things to just watch what's going to happen. And I'd be remiss if I didn't ask, without giving us anything that's non-public that you can't say, can you give us a peek at what you guys might have in mind?
So I think the short answer is I gave you the best peek I could. But I think people who watch this space know that there are a number of different, avenues of growth, and we've been pretty specific about the way we've grown historically. And I think that we've built a super solid foundation, and now we're I think in a position to potentially branch out a little bit.
Gotcha. Okay, great. Thank you. So let's talk about the various states. And there's a lot of variability, and of course against the background of potential federal descheduling sometime in the near future. But just picking a few examples, we've got California. And California, of course, has been one of the earliest states, and forgive me for saying so, BCC, but has one of the more difficult regulatory schemes to manage to, work with, I'll say, as opposed to work around. Then you've got something like Florida, where, you've had the court challenges involved that have kind of made a start and a stop. And then, you've got something like Texas, which is a huge market, which is just now starting to come online, or should be in the near future. Very hopeful, I suppose. I'm curious to hear from all of you guys how you kind of approach the different areas. And I know for Brad, obviously you guys have done a lot with Michigan also. So if you want to give some thought into why Michigan, that would be great. Why don't we start with you?
Sure. Yeah, Michigan was a unique state for everybody because a public company couldn't get in there and own a license in Michigan. So the way we got around it was we structured a put call on a private company. We became the investor of the investee, and we built our critical footprint in Michigan through that mechanism. And that was unique to the market, and that was our value proposition going forward. And it was a market that nobody was in, and a lot of paper deals couldn't be done because that was going on at the time, and that's your currency as a public company. So we went out and raised about $130 million, just friends and family around. We never used any banks, and we entered that market and relatively stealthily. And that model really wasn't being used outside of the fact that there's some private people with a lot of deep pockets that were doing their own thing in Michigan. But as a company that has had a public vehicle, it was unique to the market for us. And so we broke into that market like that. And that was a medical market, and it was changing. And so it was very similar to the Canadian market that I came from, where care providers would sell to their patients. And so it was similar. And it was also serendipitously going rec as well. And so, it was tipping over right after medical. So as we got building that model, our footprint was such that we could take advantage of both medical and rec. And then we went and bought Platinum Vapes, which was the #1 vape company in Michigan. And we're doing about 35% of all vape business in Michigan right now, and it's a big number. And again, to back to your other point of, is it acquisitional? Is it accretive? Is it organic? Well, we're doing all of that within the market that we put, the confluence of the things together that really 2 and 2 is 10. So that's effectively what's going on in Michigan, and taking advantage of these medical markets because that's the safest market that typically opens up first into rec. And so we're standardizing, we're getting our brands and pieces in place. And it's embryonic right now. This whole space is brand new. And so, you see me drinking my coffee, and it's like, nobody knows who's growing the beans in this cup, but you know what? I paid $4 for this thing this morning, and it's all about the brand, right? And so, you know, we're doing High Times, we're doing PV, and you're going to see some more brands entering the space with us as well. And it's going to be a brand game in the end of the day, and that's what we're after. And all the upstream stuff, you know, great people will do those great things for us, and we'll stand at the end with the brands. And so that's our strategy, and that's effectively the Michigan piece of it. And then we're going to roll that out to the other states that we're in as well. So we're having some fun doing it in Florida now. We've got California rolling out. We've got a couple of other states that we're announcing very, very soon as well. So it's pretty fun right now.
Right on. At the risk of digressing, but of course I'm going to, you know, one of the problems with expanding brands across state lines is the fact that you can't transport, you know, THC across state lines. So, you know, everything that you have has to be manufactured within the state that you're going to sell it in. And that leads to challenges in terms of product consistency. Right. So, George, you guys just did this deal with, you know, Ascend, and I'm curious, given kind of your brand status and you know, protecting your brand, how much attention, I'm sure there's a lot, but you know, how you placed attention on that, and what it kind of makes you think about when you look at a state like a Texas or a Florida or, you know, wherever else, in terms of your ability to shift the brand into those areas in a manner that is going to satisfy your, you know, quality control requirements.
Okay, I'll answer that question. I think it's important to, I'll be super brief. Basically, like, the way we think about the world going forward is as follows. Like, I think if you think about the way decriminalization is going to occur, and I laid this out in my presentation yesterday in a little bit more detail, but if you think about the way decriminalization is going to occur in this country, it is going to only increase the ability for the black market or gray market to distribute products across this country. There's absolutely no way that the gray market or the black market is going to be shut down by anything called decriminalization. And the black market or the gray market is what balances out product prices in one market from another. It's the simple old world of trade. And so what I absolutely am counting on is the vision of the future, where what happens is there's no political appetite to persecute anybody in the cannabis landscape for moving product across state lines. And that is going to happen whether or not we want to stop it or not, because once they decriminalize it, nobody's going to be able to throw anybody in jail for putting cannabis in the mail. So all of our brands, they're all going to be all over the country by mail. And so my point is, I'm going to do it legally and we're going to do it the right way. But I'm focused on building the biggest brand, because I think containing these markets post whatever the MORE Act brings us is an absolute ridiculous notion, because products can move across the country. It's going to be kids sending it to other kids in FedEx pouches. It's going to be with reckless abandon because there's zero appetite to stop it. And that's what's happening. So my focus is, instead of overpaying for footprint licenses in other markets, I'm focused on building the best brand, because I know it's going to get out there and I know it's going to happen fast.
Wow. Okay. That is a legal regulatory demolition derby of a comment. So that's cool. Just trying to have all the different permutations run through my head. Jen, you guys just, you know, picked up Liberty as we discussed, and, you know, IR has stated publicly there's, you know, 10 to 12 states make up roughly 80% of the cannabis market, if you will, the cannabis consumer wallet. And that's where you guys want to be. You know, how do you kind of juxtapose that approach against what George was just mentioning in terms of, you know, the MORE Act comes into play, there's descheduling, and suddenly, you know, the brands can creep across the state lines, and, you know, he's not going to buy a footprint, he's pushing the brand.
My guess
But look, I think that there are, oh, sorry, George, what's that?
No, I said my guess is you don't like it, and I understand why.
No, listen, I think there are multiple ways to skin the cat in this market. I think that ultimately we all understand that this is going to be a branded business. It's going to be a highly regulated CPG business. And I think we all, like, I don't think anyone on this call at all disagrees with where the market is going longer term. I think what we might have is different views on how long it's going to take to get there. And I think we might have different views on the commodity, the degree to which cannabis flower is really a commodity. And, you know, 50% of sales are flower, consistent across all markets. California, it's a little bit less. It's the smallest in California, 40%. But today's consumer loves flower. Tomorrow's consumer might love flower a little bit less. But this is a market where the quality of what you grow is the most important factor to how happy your customer is. And I think that is an incredibly important part of branding. The quality of what you're putting in the box is more important than how fabulous and wonderful and shiny your box is. Branding is very important to the industry, but it is not. I don't think that I think that in cannabis, the quality of your product is going to be more important than it is in coffee.
Gotcha. So
there are two other things I'd like to just piggyback on. I think that everybody on the panel has made some great points, but they're in the near term, and I think this is where Jen's comments on timeline really does matter. In the near term, every time I put somebody else's brand on my shelves, I am losing gross margin points, right? So there's an economic disadvantage that translates into behavior at the point of sale. And that doesn't mean that we don't sell into the wholesale market or buy in the wholesale market. It's just something that does influence the trajectory of organizations, which is why the authenticity and honesty of a brand and the quality of a brand is so critically important, because you have to build real durable equity. But the second piece, which I do think has an implication for the thesis that George laid out, relates to the importance of social equity. And so I don't know how comprehensive the movement at the federal level will be, but I do believe there will be some normalization that will allow operators that are licensed at the state level to perform their activities without the fear of law enforcement. Does that translate into descheduling or rescheduling? I don't know. Does that translate into decriminalization? Probably, but that's already happening at the state level. And so I think what we have to keep in mind is that every single state capital, every single conversion from nothing to medical and medical to adult use, the most important driver, aside from tax revenue and employment, is social equity. And so, and by the way, all three of those are intertwined. So you cannot have a system that's introduced at the federal level, in my opinion, that undermines all of the social equity requirements and priorities that the states and the federal government have both laid out for this industry, which creates an incredibly difficult dynamic, because you cannot have normal interstate commerce if you're going to issue 400 licenses to social equity applicants in Virginia and 600 in New York and 200 in Illinois and another 100 in LA County alone, right? I mean, these are numbers I'm kind of, I'm trying to use the fire for effect. But the point is, you've got to make sure that these entities, these entrepreneurs, have an ability to use and leverage the existing infrastructure to become successful and actually drive value, so that it becomes a success story nationally that actually attaches to the priorities that are both political and operational and financial and community based in nature. And so it is I think what you're hearing from us is that everybody in this panel, I think, is right in what they've said, but it's a little bit of everything, right? And the timing of how those things get sequenced is going to be very difficult to handicap, because I don't think there's a politician in the United States that wants to be on the other side of social equity, right? So you do have these competing priorities that aren't necessarily aligned at their foundation.
Yeah, it's an incredibly complex issue how we go from where we are today to where we all know we're going to be, whether it's 10 years from now, 5 years from now, 7 years from now, who knows? But we all know where we're going. And we all, and the path to get there is going to be windy and complex. And to Nick's point, there are too many important issues at stake, I think, for people to make it, to try to get there too fast or in a clumzy way. I think that people will really be thoughtful about this. I hope.
I agree with you. I'm just saying, just in that conversation, whether or not it feels convenient or not, all the different factors are in that conversation, but I promise you, in that conversation is, where are our tax dollars? Because
totally agree. Tax dollars, jobs, social equity, those are all really important. Those are all really important key drivers of the complexity. And we all know, like, the legal and Yeah, all of the different regulatory complexities too.
Yeah, and by the way, I think the importance there is the order of importance and priority for the politicians that are making these laws and regulations, right? It may not be, we're looking at the lens from operating perspective, but in the meantime, I think every one of these companies, every company that that you can think of, has the ability to build a wonderful brand, to leverage infrastructure, to create scale, to really drive value. And so it's, again, back to, I think, the original, the original point and theme that you've heard here is that all of the things that are happening are net positive, right? And if they happen in a more methodical, thoughtful way, which I tend to believe they will, because they're of all of the important issues that have to be addressed as we go along, I think that results in a really powerful combination that will drive economic value, that will drive social equity priorities, that will drive employment. And by the way, employment and tax dollars and social equity, that's precisely how people are getting reelected, right? I mean, so if you think about the impetus behind a lot of the movement we're seeing in the U.S. Senate, it's because of the election cycle. And I think it was actually—
I was going to say it's all, and we also have to be we have to be mindful of where all these conversations are in the election cycle. Totally true.
Correct. Yeah, I completely agree. Completely agree.
Locally and nationally.
Yep.
From a moderating perspective, I was not dumb enough to get in between that. So much for a boring panel, if anybody was wondering. Nick, I am curious about Columbia Care's plans specifically. You guys are vertically integrated in every state that you're in. And, it seems like the strategy really is to be able to maintain within each state kind of your own self-contained ability to, cultivate, manufacture, distribute, brand, the whole thing. If we do see, a situation where we can cross state lines with product, is that something that you guys would continue to maintain, that consistent business model?
So, I think that, the reason why we have the infrastructure we have is because the industry itself and the supply chain for the industry is so immature. You just don't have reliability of supply. There is not a single market that we are in where I can go out into the wholesale market and actually maintain margin and margin expansion without running the risk of having supply shortages, product shortages, whatever it may be. So if I just look at it just from a fundamental perspective, I must today have that fully integrated platform, because even in Colorado and California, where we have very, very strong market share positions, there are supply chain shortages. It's in things as basic as smokable flour. When you fast forward into the, let's call it the midterm and near term, the second reason why we have that infrastructure is because, last year my wholesale revenue was mid-single digits. This year it's mid sort of teens. Next year it's going to be, north of 50%. That transition is happening at an accelerated pace because we have the ability to roll out brands, right? Because Columbia Care is almost a parent company. We have an architecture of brands. We have recently rebranded all of our stores to Cannabis, right? There's a massive change happening to make sure that the relevance is retained as we transition from medical to adult use. And as part of that process, we need to make sure that we have continuity and the ability to launch a single brand in 11 markets overnight, which is what we're doing right now in 3 different brand categories. We want to be able to sort of make sure that, if we have a wholesale relationship in Colorado, people come to us first because they know they're going to get a certain level of quality and a certain level of consistency and a certain level of supply. And so all of those things really matter in terms of building your reputation as an organization, as a sort of, let's call it a foundational pillar for the industry, but also as a wholesale supplier, and then finally, ultimately, as a brand builder. So, we view this as a transitional market. The benefit is that, the cannabis is such that you can really drive enormous rates of return on capital investment. And so we've made that knowing that, in, let's say, interstate commerce comes tomorrow. Well, no one would be happier than us because we have the single largest grow facility in Colorado. We have hundreds of acres that I will take and I will put into New York's program, overnight. And guess what? We'll be able to outprice and outsell pretty much any. Right. And I would say the same thing for the investment we just made in New York State. The reason why we chose the 1 million square feet in Long Island is for the environmental conditions that allow us to produce at a rate, at a quality, and an efficiency level that is very, very difficult to beat under almost every conceivable circumstance. So we do have nodes and hubs of supply chain, I guess, let's call it depth, but it's also based on the size of the market, right? New York's a $7 billion market. You have to be a big player there in order to compete. Colorado's a $2 billion market. You have to be a big player in order to compete. You go market by market, and that scale makes us attractive strategically. It makes us, attractive as a supplier. It makes us attractive as a retailer, and it allows us to really, I think, scale in and begin to do what say, frankly, what Brad and George have done, which is create brands that are known, right? I mean, that is, I won't speak for Jen and Air, but we watch our competitors very carefully, and we're very impressed at what everybody's doing. We're not always the first, but we're very good fast followers. But I always felt strongly that without that infrastructure, we wouldn't be able to accomplish our mid and long-term goals, which, by the way, are going to be, angling towards an endpoint that will have tons and tons of ins and outs along the way.
Gotcha. All right. Thank you for that. So we're getting close towards the end. Brad, I wanted to ask you, since you were a little bit quieter in that entire discussion, what your thoughts are as far as, for Red, White, and Bloom and the strategy that you've put out, as far as being able to facilitate having the infrastructure, the supply chain, and everything else in order to produce your brands.
We have the biggest grow facility in America. We got 3.6 million square feet under glass right now, 80 acres contiguous. So, if there's a center of excellence to be had, it's going to be us. And we can, it's a central point in America, and we can grow. Standardization is going to be key for this whole industry. It's like walking into your liquor store and wondering what the alcohol content of your spirit is. If it's variance to the degree cannabis is from one crop to the next, you're dead. Again, the Starbucks is your consistency. Your level of consistency is key, and that starts with medical. And so, if you can't grow a consistent product or produce a consistent product to, detail doctors on so they can dose, titrate, and gauge efficacy, which is where I came from, a heavily regulated medical market. That's key. And so that's what we're doing. And so we got rid of the master grower. There's no such thing as a master grower in our organization. We hire PhDs, we hire horticulturalists to grow a standardized crop so it's consistent across every strain we do every single time. And if it's an out of spec product, it doesn't become part of the brand. And that's all there is to it. And that's how we run it. And that's how any CPG runs it. It's just 101. So, there's a lot that goes behind the brand in terms of what we are, because we're high times, we're PV, but it's consistency is key. And so you're going to do that in rec, you're going to do that in med, and you're going to do that everywhere else. All these verticals that are going to be, coming into play, you're going to need consistency. And that's what we do. And that's what you underpin a brand with. And that's how you build a brand. That's how you can keep a brand consistent. And then you beat the crap out of the cogs, and there's your margin, and off we go. And we're a very profitable company that everybody wants to invest in.
Or actually, I think that was wonderful. I think you just put actually a total hammer on the nail of the question of what's next. And the buzzword probably is consistency. Listening to all of you guys speak in the various models. So we're getting close to out of time. I know I wanted to ask Jen specifically about the Florida market, and particularly you guys obviously acquired Liberty, and it's been said that the Florida operation could be more than your entire market cap in terms of how it's worth. How are you guys thinking about the Florida market?
Well, listen, I think we have been focused on Florida as a pivotal market for a long time. And, it's not quite as big as California, but it's a pretty big market. And it's an extremely attractive, 20 million person, very fast growing medical market. And even in medical, it's an extremely attractive place to be. And when it ultimately becomes a recreational state, I think it's going to be absolutely, absolutely amazing. So we've been focused on it for some time, and we feel like we really got into with the right asset at the right time at the right price. Because for Florida, you are really going to be in a position where you need to have the footprint, you need to have the infrastructure today in order to really be an excellent player for when you ultimately shift to recreational sales. But in Florida, like across the country, I mean, Florida is the kind of, people, I think a lot of times think of California as the bellwether market for cannabis. I think that people ultimately will also see Florida as a bellwether market for the future of cannabis, because there are lots of dispensaries. It's extremely competitive. You've got to be a great grower in order to really do well. And we think that really aligns with what we do well as a business. Our cultivation is excellent across the board. Our retail experience is phenomenal, and we'll bring both of those to kind of.
I'm just gonna say one small thing in defense of California. Okay.
Oh no, I'm not saying California's not good,
you
George.
can have
I'm
your-
just
you can
saying
have your
Florida's better than
million
people
square
think.
You can have your million square foot grows and your scientists in lab coats, or you can have the 20 highly competitive, well-positioned people in Florida who are competing and with their great growers, or you can have the gauntlet that is 3,500 licensed growers in California who are constantly searching for the perfect high. And it just is going to be incredible to ever compete with that. I'm just saying, like, California weed reigns supreme, and there's a reason for it.
Hey,
Listen, I do think that California teaches people how to make great weed. There's no doubt how to grow it. But the market dynamics of Florida, I think, are going to be a really great indication of how a lot of the country is going to go. And until you can ship weed across state lines, the art of growing in humid, hot Florida is going, and the person who gets that right and best is going to be an extremely, it's going to be a great business. And that's what we're going for.
I love it. We've got an East Coast, West Coast thing going on here.
And by the way, I'm totally on the East Coast, so I'm a trader, by the way. I'm 100% a trader.
So with that, I'm going to raise the specter of, the Leviathan. So we experienced descheduling. Where do you guys see, and anybody can answer who wants to, where do you see a place for an Archer Daniels or a Conagra or any of the other, very large ag companies? Do we see any kind of a future where Mosaic comes in with particular strains and markets, and we'll leave Monsanto out of this? Patrick may tell us.
It's all good. It's all good. I want you to keep going for 2 more minutes since we started late, and I'll try to keep Tupac and Biggie at bay here.
Let's let Brad answer that, because he's got the biggest growth amongst us.
So yeah, look, I mean, there's going to be upstream stuff that other companies are going to take over and do incredibly well. Much like, the analogy of the brand is like, I don't know who grows the Green Giant's corn or his beans, but it's somebody, and somebody does it really well. It's just that analogy, and this will commoditize, and we have to look past the magic of the dude in the basement waving his magic wand going, dude, this is the best thing ever, because like alcohol, it's going to be standardized, and you're going to go in and you're going to have your brands, and you're going to have the consistency. As much as a great winemaker can make his, vintage collection, there's going to be the stuff on the shelves of the everyday consumer, and that's the way it's going to be. It's going to normalize. And so the upstream stuff and the processing and all the manufacturing pieces of this new economy. And remember, this is a brand new economy. This is a brand new economy. Like, this is the biggest thing that has hit the world, I think, in the longest time. And we have the opportunity to be the torch bearers of this. There you go. How about that for brand integration of this whole industry? And I think, moving forward, all of these upstream pieces are going to be taken over by real scale players that have a real interest in this, that's going to do it better than us, and we're going to do the downstream stuff that's particular to our demographic and our target markets. That's what's going to happen, I think, from top all the way through, and you pick up where you pick up to service your customer in the most efficacious way.
Excellent. All right. Thank you. So Patrick is back, so I'm going to wrap it up. Thank you guys all for participating in what has been a delightfully spirited panel. I forget yesterday who said something about avoiding the talking heads while we were prepping, and it wasn't going to be a problem. Again, thank you very much for participating. You've got wonderful companies. They're all doing wonderful things.
Thank you.
Yeah.
Great to see everybody.
Thanks, everyone. We really appreciate it. Josh, thanks for the discussion, man. You guys are all phenomenal. I don't know whether to rumble or clap or what after that, but that was awesome. So thank you. We'll see you again very soon.
Thanks, everyone.
Thanks, Patrick.
Take care.